XRP traders on Gemini now have an opportunity to extend their exposure to the cryptocurrency as the US-based exchange officially launches XRP perpetual contracts. By the way, is Ripple CEO right to have fired back at the Dogecoin founder due to a debate regarding the relevance of meme coins? We will also be looking at the TD sequential indicator that recently spotted a new buy signal on the XRP chart amid the prevailing bearish market trend. Finally, crypto enthusiasts have spotted some inconsistencies in the SEC's legal argument after the regulator claimed that crypto assets themselves represent the embodiment of an investment contract. Stick with me till the end to find out what Judge Torres has to say concerning the SEC inconsistencies. If this sounds like something of much interest to you, be sure to check out this new video starting now. Hello everyone and welcome to our channel, where we talk about the latest updates on XRP and the cryptocurrency world in general. If this is your first time watching one of our videos, we happily send you a special welcome. We invite you to hit on the notification bell so you never miss another video. We are announcing that this channel has a giveaway of 200 XRP. To stand the chance of participating, all you have to do is simply subscribe to the channel, like this video and comment with the hashtag XRP, and the winner will be announced on the 31st of January. Gemini has finally unveiled the reason behind its latest social campaign around XRP. The exchange disclosed in a post on X this morning that it plans to launch perpetual contracts for XRP. Notably, the introduction of XRP perpetual contracts offers traders the ability to go beyond spot trading by allowing them to use leverage. Being perpetual contracts, traders can continue to hold their positions without any expiration date as long as they can cover their margin. As a result of this, Gemini traders can amplify their positions, potentially magnifying their gains as well as their losses by trading the contracts on the Gemini derivatives platform. However, Gemini has confirmed that the platform is not available in the US, UK, and the European Union. The recent development comes less than 6 months after Gemini introduced spot trading for XRP in the wake of an official listing. Recall that the exchange, which never supported XRP trading, listed the asset for the first time in August 2023, a few weeks after XRP gained legal clarity. Prior to the listing announcement, the Gemini team initiated a social campaign around XRP, leading to speculation on a potential listing, which materialized a few days after the campaign. The launch of the XRP perpetual contracts also followed a similar social campaign. At the start, the official Gemini X account made 3 cryptic posts on XRP, charging the broader community not to forget XRP and hinting at an imminent development for the asset. Amid the mentions, certain influential figures within the XRP community triggered speculations on what the development could be. For instance, Ari, a prominent XRP community figure, asserted that the development could center around a Gemini joint venture for an XRP ETF in Europe. Shortly after the posts, Gemini presented a riddle which pointed to XRP. Their latest announcement confirmed that the answer to the riddle is the XRP perpetual contract. While the launch of the perpetual contracts is an encouraging move, expectations were higher due to the nature of the social campaign. As a result, some XRP community members have expressed their disappointment. Others believe it is indeed a pivotal development. Reacting to the announcement, Zach Richter, a notable media personality, claimed exchanges were only interested in the XRP community and their business. Recall that Bitstamp also ignited a similar hype around XRP last August, with community members anticipating a pivotal announcement. However, disappointment filled the scene when the exchange only announced a lending program for XRP with 2% APY. Please, do not forget to subscribe to our channel and also hit that notification bell to be the first person to get more updates about the latest happenings as regards to XRP. A clash unfolded following Brad Garlinghouse's remarks on Dogecoin during the just concluded World Economic Forum in Switzerland. The discussion centered around the need for precise regulation in the industry, distinguishing between utility-driven tokens and meme coins. Specifically, Ripple CEO Brad Garlinghouse took a dismissive stance toward meme coins. He singled out Dogecoin as an example of a pointless crypto project. "I don't get it," he remarked, signaling a gesture of what's the point to challenge Dogecoin's relevance to the crypto industry. Dogecoin co-founder Billy Markus, who uses the pseudonym Shibatoshi Nakamoto, took to X to defend Doge. Specifically, Markus dismissed Garlinghouse's perspective, stating that the misconception lies in labeling Dogecoin as fundamentally different from Bitcoin. He boldly asserted Bitcoin and Doge are similar in essence, with the minor difference being in ticker symbols. To reinforce his arguments, Marcus shared a conceptual analogy, equating the dismissal of Dogecoin to preferring one fiat currency over another. He emphasized the parallel by stating, "This is like saying I totally get the euro, but the yen is nonsense." Notably, Billy Marcus has taken down his response at the time of reporting, though traces of it remain in the public domain. In reply, Ripple CEO Brad Garlinghouse acknowledged the perspective put forth by Marcus, stating, "I understand the point you are making and agree with the point in some ways." However, he introduced a counterpoint by proposing an analogy he believes is more befitting. Specifically, Garlinghouse drew a parallel between Dogecoin and the Zimbabwean dollar in relation to the United States dollar. This comparison suggested a significant contrast in terms of utility and value. Essentially, he sought to establish that although both the US and Zimbabwe have currencies labeled as dollars, their utility and market values are miles apart. This counterpoint emphasized the substantial differences between Bitcoin and a meme-themed coin like Dogecoin, challenging the notion of their similarity. Furthermore, over the past week, XRP faced a decline of over 8.18% in its value, succumbing to bearish pressure and settling its market value at 52 cents. The asset experienced an even more pronounced setback of 14.15% since December 23rd, as market participants continued to offload XRP. However, distinguished market observer Ali Martinez has identified a buying opportunity amid the continued sell-off, pointing to a bullish signal that could indicate a potential rebound for XRP. Martinez called attention to the development in a recent post on X. Martinez, known for his expertise in analyzing market charts, highlighted the TD sequential indicator and its accuracy in predicting XRP's movements on the 3-day chart. The precision of this indicator has been established in various instances in the past 8 months. An illustrative case occurred in mid-October 2023 when XRP traded around 48 cents. During this period, the indicator identified a buying opportunity via XRP's 3-day candlestick patterns. By early November 2023, XRP had clinched a 59% gain, entering the 71 cents zone. Similarly, the TD sequential indicator proved its reliability again in December 2023, signaling a bearish trend for XRP. This prediction materialized, leading to a significant decline of 36% in XRP's value. Notably, the TD sequential indicator identifies potential trend reversals or continuation patterns based on a sequence of candlestick counts. In the current case, as Ali Martinez highlighted, the buy signal on the 3-day chart suggests that XRP may be poised for an upward movement soon. In other words, XRP's market value of 52 cents could prove a favorable entry for market participants looking to invest in the digital asset. Earlier this month, Martinez revealed the presence of an ascending pattern in XRP's market. He expressed confidence in its potential to drive XRP toward the $1 zone. Significantly, he highlighted a buying opportunity within the pattern, with a $1.1 target in sight. Now to our main focus for the day. What does Judge Torres have to say concerning the SEC inconsistencies, and does the crypto assets themselves represent the embodiment of an investment contract? Please, do not forget to subscribe to our channel and also hit that notification bell to be the first person to get more updates about the latest happenings as regards to XRP. This was the SEC lawyer's position in yesterday's legal hearing centered on Binance's attempt to get an enforcement action from the securities regulator dismissed. For context, the SEC charged Binance and Coinbase in June with violating federal laws by operating unregistered securities exchanges and listing crypto assets deemed investment contracts. In the Binance lawsuit, the SEC labeled 12 crypto assets as securities. On the contrary, Binance and Binance US filed a dismissal motion asking U.S. District Judge Amy Berman Jackson to dismiss the lawsuit. Reports from the courtroom during Monday's hearing suggested that the SEC claimed the Howey test, a long-standing security test in the United States, was clear for all assets, including cryptos. According to reports from the courtroom, the Commission's lawyers claimed that the crypto tokens listed in the Binance case represent the investment contracts, adding that the assets are the embodiment of a security. However, the SEC's argument did not sit well in the crypto community, as enthusiasts spotted significant inconsistencies in the theory. Notably, attorney John Deaton, who represents thousands of XRP holders in the SEC versus Ripple case, commented on the development. The pro-XRP lawyer revealed that the SEC first expressed the embodiment theory when responding to his motion to intervene on behalf of XRP holders in the Ripple legal tussle. An excerpt from the SEC's response read, "The XRP traded, even in the secondary market, is the embodiment of those facts, circumstances, promises, and expectations, and today represents that investment contract." Attorney Deaton pointed out that the SEC has failed to cite any case law to support its embodiment theory. Additionally, Fox Business journalist Eleanor Terrett was among those who commented about the SEC's inconsistent arguments. In an X post yesterday, the pro-crypto journalist noted that two federal judges, Judge Annalisa Torres in the Ripple lawsuit and Judge Jed Rakoff in the Terra case, declared that the token in itself is not a security. She pointed out that the SEC also acknowledged this fact in both cases as it described the tokens as merely computer codes. Per Terrett, the SEC's inconsistent legal theories were seen in the Ripple and LBRY cases. For instance, the judge in the Ripple case called out the SEC for presenting inconsistent arguments about Ripple's other distributions of XRP. According to the judge, at one point, the SEC argued that Ripple's other distributions were the sale of unregistered securities as they were made in exchange for non-cash considerations. She added that the SEC later changed the argument by claiming that Ripple's other distributions of XRP were sold indirectly to the public to raise liquidity for the company. Now, I'd love to hear your thoughts on this in the comments section. Make sure you like the video, don't forget to subscribe and hit the notification bell. This really helps me with the YouTube algorithm. Also, you can help enlighten others just like you have been enlightened by sharing this video to as many people as possible. Let's get this news everywhere, guys. If you are a true cryptocurrency fan, don't miss any of our content. See you tomorrow to talk about the latest news that concerns us all as a community.